Hi everyone and welcome to our market analysis videos here at Zenfinex. For those who are new to the video, my name is Connor and I'm the Senior Market Analyst at the company who provides to you these daily videos on market analysis and educational content as well. Now for today I'm going to be covering a struggling Virgin Galactic stock price forecast for the remaining months of 2021. And to do this I'm going to give an overview of the stock first, then look at the most recent news events which has meant this stock is trading down at around $19 per share. I'm also going to conduct an analysis on the chart to mark key levels to watch out for the remainder of 2021. Okay, so a quick overview first. Virgin Galactic are an aerospace company founded in 2004. The company is focused on the development, the manufacture and operations of technologies such as spaceships, and the real purpose of the company is so they can conduct commercial human spaceflight. Now the stock price has been extremely volatile since the public could buy shares in Galactic in 2019, and the range in stock price just this year is around $40 per share, which is quite astonishing really. Now let's have a look at Galactic's perfect start. The price has reached as high as $62 per share with the recent surge due to a successful test flight in May this year, and also the FAA, which stands for the Federal Aviation Agency, gave approval to carry passengers into space, which is a huge deal for these aerospace companies. Since then really, it hasn't been plain sailing, and there is only really one reason for this, the most recent news, and that's due to delays in the original schedule. Now it was expected that from investors really that commercial operations were due to start from early 2022. However, Galactic have very recently announced that there will be at least a 9-month delay whilst they improved their spaceships, or that's what they claimed the reason was. And last Friday, during the trading session, the stock fell 17% because of this and has continued to fall, which really shows the volatile nature of this stock. And what should we look out for next? Well, an important event that I have marked is the third quarter earnings call in early November. And although a strong earnings report is unlikely to push the stock price much higher, because as we've seen some of the biggest technology firms be in the red in terms of revenue, but their stock price goes to the moon. So I don't really see that as much of a correlation. But investors will be listening out for answers on their spaceship programs, how the improvements are going, if they're still on track for the 9-month delay, and expected ticket sales as well is going to be in focus. So that's going to help. All of this is going to help push the stock price out of a rough patch, I think. But let's take a look at the chart and dive into the real key levels to watch out for. So then let's dive straight into the chart then and have a look at really the key levels, and you can see straight away where I've got my cursor here, this is the price action that we've had in 2021 so far. We've topped all the way up at 62, then we slumped all the way back down to those May lows down at around 13, 14. Then we went back up towards that 57 level. That was due to the test flights and the FAA news that we had, which is great. And then since then, we've been on another slump due to the delays in the flight. So it really has been driven by these fundamentals, and also this tends to be one of these stocks which really benefits from the... Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus 0 commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. The social media buzz like the Reddits and the Wall Street Bets forums, which is why we see volatility like this. Now we're at a really interesting level on the chart. Now you can see that when we did have that price increase, we did leave gaps in the market, which is quite common in these stocks, which you can see we went down and filled, and we dropped even lower, and you can see we have another gap in the market. So we can get rid of that one because we know we filled that gap. But we can mark this one as a FVG, which is a fair value gap. You can see this gap in the market that we had. This was back from May. I know it's all the way back in May, but it's still valid, and we still could see the market come in and at least fill this gap that we have in here. So that's the first thing I'm looking for. Once we do that, I'm looking for a bit of, let's say, market manipulation potentially around the lows that we have here. So let's put that as just a standard market low. You can see, I'll take it all the way back actually, because we've had this level as support previously. We've had it as support all the way through April to June of 2020, again in September of 2020, and this is the low created from May, which again bounced from that level. So what I'm interested in is, I think that the news around the delays, and I think up until we see this Q3 quarterly earnings, I think what we might see is the market drop down below and maybe just wick below this $14 level, which would be a liquidity grab, because anyone who's got or most people who have got buyers on this market, we want to see where this liquidity is, and the liquidity is at these lows. So we're going to have a lot of stop losses for buys below these lows, because it makes sense, right? Because it's been support before, but we may see the market just wick in, and then we may see this surge to the upside. I expect a fall to, let's say, around 12.5, 13. And then I want to see a bounce up and test the 50-day moving average. That's when it's going to get interesting, because if we can run up and we can break through wherever this 50-day moving average will be situated, potentially at around 20, then I think we're going to be on for another sort of move, because obviously people would have got over the fact that the delays are happening. I'm sure Virgin will come out and get around the fact that these delays are happening, and as I said, blame it on the improvements of the spaceship rather than supply issues, which is understandable. So we may see a break of this 50-day moving average towards the end of the year potentially, or after the Q3 earnings report. Then again, we're going to be looking for really key levels here on the 100 and the 200-day moving average, and eventually obviously next year going up towards these levels that we have up at around 50. But for the remainder of this year, I see the price falling excuse me, down in towards this 13 level, a bounce up and testing the 50-day moving average, potentially sitting around this 20 to 24 level by the end of 2021. And I've seen some analyst predictions, and I think the average prediction for the share price of Galactic is around that 20 level, which makes sense. So I do think we're slightly undervalued at the moment. I'm going to be patient just to see. I want to see that one last drop before we can move up and test those 20 levels. My take profit for 2021 will be up at around $25 per share. So that's it for Virgin Galactic. I hope everyone's enjoyed the video. Important to be patient in this market, and another market where we really need to listen out to the fundamentals, because they seem to drive the market quite a lot. If you enjoyed the video, make sure you like and subscribe to the channel. As always, it helps boost the channel, and we do really appreciate all the likes and shares and subscribes and the comments that we get. Other than that, I hope everyone has a great trading day, and if you're watching this video in the next couple of months, listen out to that Q3 earnings report. Take care.